An index, such as the PSEi, is a basket of securities designed to measure a specific market segment, both as a performance indicator and as a benchmark for investment strategies. So, why should Filipino investors pay attention when the PSEi index is rebalanced twice a year, with stocks added or removed? And what should we monitor in the upcoming August rebalancing? Hi, I'm April Tan. Welcome to another episode of Intelligent Investing Market Talk series. We're joined by Adrian Yu, COL Financial's Head of Institutional Sales, to help us answer those questions. Thank you, Adrian, for joining us in the show.
Hi, April. Thanks for having me.
Okay, so let's start with the most basic question. Why is it important for Filipino investors to know what stocks will be added or removed from the index?
Well, I think that the question now is timely given that we're going to be seeing the second half index rebalancing. So I think it's important first we discuss or even talk about why do we even have index rebalancing in the first place. I think it's largely because for passive investors, they want to be able to make sure that the companies inside the index are of high quality. Hence the rebalancing where they try to put in better companies and exclude those that they deem not worthy to be included in the top 30 names. But when it comes to index rebalancing, I think it's important that investors realize that fundamentals is still king and that this rebalancing, it's just an opportunity for you to capitalize on the price. If you're selling, you want to try and sell into the rebalancing as much as possible. And when you're buying, I guess the timing element there comes into play where you get to buy the stocks cheaper should it be deleted and sold off on the rebalancing date.
So in other words, if a stock is going to be added, you buy it before it's added. So on the rebalancing date, it will go up.
Normally, investors, particularly institutional investors, actually try to get in earlier. So what normally happens, as we've seen in the recent rebalancing, which saw a rate come in, the spike to get included was actually quite small. Contrast that to, let's say, a name like China Bank, although there was some institutional participation leading up to the inclusion date, because of the liquidity or the lack of liquidity, we actually still saw the name jump 40% on the inclusion date and then sharply sell off after. So these cases are more the exception than the norm recently. For the deletion names, it's also been quite a mixed bag. Normally, in previous rebalancing, normally the deletion date is the low, but with the case of Wilcon and Nickel, it was actually quite the opposite. Nickel bottomed that day, Wilcon still fell another 20-30% lower. So it's a mixed bag. So back to what I said earlier, I think fundamentals is still king, and then just try to take advantage of any sell-off and gap ups on inclusion dates.
I see. So why do stocks go up during inclusion date or leading up to the inclusion date, and why do they go down leading up to the exclusion date?
Well, I think it's largely because of how passive funds generally work. So I guess that's where some arbitrage can happen because passive funds, if they don't want to have any tracking error, they actually have to execute all the shares on the exclusion or inclusion date. So normally, if the number of shares they have to buy on the inclusion date is way too much compared to the average daily value turnover, they can push the prices way higher or way lower. So, but normally, I guess in theory, this shouldn't happen too much, but because of the lack of liquidity, this happens.
Yeah, because our market right now is very illiquid. That's why if they need to buy it by this date, they end up pushing the share price. So I guess my question to you, just to help our viewers, if let's say I'm lucky enough to have the shares that will be included by the August deadline, when should I be selling? Should I be selling on the deadline or one day before or after?
But I think as a rule of thumb, for a normal, I think we can discuss this a bit later, but I think for normal rebalancing, normally you can sell maybe a third on the week leading up to the rebalancing date, a week the day before, and then maybe another third on the actual rebalancing date, just in case you see a spike. So you're trying to, I guess, hedge your bets because you don't really know which direction it's going for, right? But if you already know you're a seller of the name, you already feel that the fair value has already been reached, or it's a reasonable price that you want to sell to. I think it's just trying to, I guess, maximize the selling price you can get.
So you could like slowly average out.
Yeah.
What's your guess for the August rebalancing? Because anytime soon it will be announced. What will be added and removed?
So I think the deletion name is simpler. It will be Bloom. We expect Bloom to get deleted in the upcoming August rebal. I think the juicy part is, will Plus get in? Because if you follow the letter of the rules, it should get in, considering it has met the minimum criteria. It has a 20% float, 9 out of 12 months median value turnover. It's top 25. It's top 25 in terms of volume-weighted market cap. So actually, if you really, by the rules, it should get in. I think what's I guess rattling markets now is that there's a chance that it could potentially not be included because of the recent share price volatility and I guess questions on the long-term viability of its business. But I guess we'll have to wait and see for the upcoming announcement whether or not Plus will get in.
I see. So, hypothetically, what if I own shares of Plus and I want to sell? Do you think it's addition to the index is an opportunity for me to actually sell at a better price?
So base case, I still think that Plus should still get in because it will be quite a precedent if they actually not follow the rules, by the numerical rules to not put it in. So I expect Plus to still get in. But with regards to whether or not how you sell it, I think at this point, it's a trade for me more than a long-term hold. I think the volatility is too sharp considering it fell from 65 to 14 and now back into the 20s teens area. So I think the volatility is just too much. What will ultimately determine whether or not, I guess, you can hold it into the potential inclusion date is how many percent of your portfolio do you have in Plus. For example, let's say you have maybe 10% of your portfolio, you can potentially risk trying to get a better price. But if your shareholdings of Plus is more than 30% of your portfolio, I think it might be prudent to trim some on rallies, should we be lucky enough to see it, and then maybe sell the rest on the potential inclusion date.
Is there another name that people are speculating will be added?
Yeah, so I think with the recent share price movement, the market thinks it's going to be RCR, so Robinson's REIT. Initially, the share price action was quite strong because the market is expecting it to be included on the next February rebal. But just because of the risk that it's not going to be Plus in, then by default, it's going to be RCR for the next rebal. And I think if investors were to, let's say, speculate on the name, what they have going for them is that at least it offers 6% yield. So if in case you get it wrong, you're not really in some deep trouble considering you can hold it, take your 6% this year, and then look to see whether or not you can eventually sell it for price appreciation on the next rebal.
Okay, what about Bloom? Do you think that investors should buy it if it is removed from the index? Why or why not? And should they buy it right away or should they wait? What do you think?
I think when you see recent rebalancing, at least for me, what I've noticed is that it's quite safer to buy a deleted name than to speculate into a name that's going to be in the index. We've normally seen those names deleted rally eventually, especially if the fundamentals are, it's just basically a sell-off on a cyclical problem and then you get removed from the index. But if your fundamentals are intact, I think those are the names that you should be looking to buy in the first place. With regards to Bloom, what we like about it is that the business is not concentrated on the online gaming space. I think it just puts into question whether or not you'll see a lot of growth moving forward. But in terms of the fundamental businesses, I think it should still remain the same. What matters now is whether or not we see some more catalysts. So for me, I think it will be a wait-and-see approach. But because not a big portion of the business is related to online gaming, it's not out of the question for me to potentially look for an entry once it's deleted.
Yeah. So I guess for the viewers, Bloom went up because of its online gaming platform, but its bread and butter business is still the brick and mortar casino. So I guess that's something that people should remember as to why potentially it could still go up afterwards. Unlike, say, Plus, which is purely an online gaming platform, which could be negatively affected by all these regulations that are coming out. Okay. So a few months ago, the PSE came out with a proposed change in the criteria of stocks that will be added and removed from the index. I'm just curious if you think these changes will be adopted right away and why or why not.
So I think some of the changes you were alluding to was that they might reduce the minimum float requirement to be included in the index from 20% to 15%. They're trying to put some measures in place, such as a minimum market cap. So recently, there was some chatter whether the market participants are actually wondering if the minimum market cap of 120 billion is enough, considering it's a fixed number and eventually we hope to see that market caps continue to trend higher. So a fixed number might not suffice. Maybe they should change it as a percentage of total market cap or ranking. So I think they have to still figure this out. And they're still also working on minimum liquidity requirements to ensure that the name is qualified. I guess what investors are worried about is that the requirements might be a little too strict, considering where we are now liquidity-wise. You might see a name that is traditionally liquid, and then just because of few months of inactivity, will technically not qualify to be an index constituent. I think they have to balance this out first, especially considering that too much volatility in the index is not really good to begin with, because you'll essentially be forcing passive funds to buy at the high and potentially sell at the low. So I think they have to work on this still before adopting it.
Yeah. So maybe back to the drawing board again. And then I think a lot of fund managers commented on the rules. So yeah, they might have to reevaluate again and tweak it. Okay, so finally, what are some tips that investors should keep in mind if they want to take advantage of trading opportunities that materialize because of index rebalancing?
I think for our investors, I think they should be mindful if the trade is a long-term hold, that they're just using the deletion, let's say potentially, to get a cheaper price, or is it really just a trade to begin with? Because normally, because of the passive funds, I mean, they're exiting their position, it can actually get into some oversold territories. And then even if fundamentally you might not like the name, just because of the fund flow potentially already being out, you could see a dead cut bounce and rally. So I think they just have to be mindful on what they want to do, and especially for those who are, let's say, speculating on an index name that's going to be part of the index. If it doesn't get in, you have to be careful and be worried that what will you do once it doesn't get in? Are you comfortable holding the positions? I think in the case of, let's say, potentially RCR, you have the yield, so maybe you're okay, right? So I think they just have to find the balance of and maybe risk management. How many percent of the portfolio do you want to risk on a rebate trade?
Yeah, so I guess it goes back to the basics, like what is your reason for buying the stock? If it was for trading and then the scenario doesn't pan out as you expected, then you cut losses. Yeah. Pero pag fundamentals, then maybe you can continue to hold on. If you tapos sinuwerte lang, it went up because of rebal, or it dropped because of the rebal, then you can continue to hold on to your position.
And I guess maybe just to add, when a name normally gets kicked out of the index, liquidity normally, I guess it becomes less because passive funds no longer have to participate. So if you're buying, maybe be wary also if you're planning to buy a big size, and maybe check what the average daily value turnover is. Because even if let's say you want to cut your losses, you might not be able to without, I guess, destroying the price further. So I guess just some things to consider.
Okay, so with that, thank you very much for sharing your thoughts and knowledge about index rebalancing. So we have an August one, and after this, a February rebalancing. So twice a year.
Thank you. Thanks for having me.
Thank you so much. For those watching, we'd love to hear from you. Would you buy a stock on speculation that it will be added to the index? Or would you rather buy a stock after it is officially removed from the index? Drop your strategy and reasoning in the comments below. If you found this discussion useful, don't forget to like and subscribe for more market insights. And remember, stay sharp, stay selective, and as always, invest intelligently.